Today, I reveal my Tfsa dividend income for the month of May. Let's do this! My wife and I do our finances together, so I'll share our combined Tfsa dividend income we received through our 3 investment accounts with Scotia iTrade and Wealthsimple. But before I jump into who paid us and how much, let's take a brief look at our portfolio's dividend calendar. You probably noticed January, April, July, and October are the heavy months, and February, May, August, and November are the light months. Just so I'm 100% transparent with everyone, I'll be sharing my dividend income based on when it lands in my account, not based on a payout date. For example, BNS says they were going to pay out in April, but I didn't receive my dividend and drip share until May. In May, we received dividends from the following companies. If you want to see our entire $176,000 Tfsa portfolio, check out the link here. I'll go through each holding according to the dividend weight in my portfolio, starting with the smallest. Our smallest dividend received was $16.02 from Toronto Dominion Bank. TD provides 0.7% of our total dividend income. This should be much larger. However, I trimmed some shares when the stock price was over $100, as I mentioned in my portfolio reveal. I'll most likely end up regretting it. Hopefully I can learn from that mistake. TD is trading at about its 5-year average dividend yield of 3.8%. Just last November, they had a huge 12.7% dividend raise. They were the only bank to not raise dividends in May. I expect them to do so at the end of the year. Next, at $23 is our one closed-end investment fund we have, Canoe EIT Income Fund. It provides us with 3% of our yearly dividend income. My yield on cost is so low at 11.15% that I can bite the high cost of owning this income fund. I'm not an income investor nor plan on it, as I'll continue to mention. I'll keep this on the back burner and use the monthly distributions to purchase other high conviction stocks I have in our portfolio. And if the time is right, I'll dump my shares. Our next dividend received was $38.22 from another monthly payer, Pembina Pipeline Corp. It pays us 5% of our yearly dividend income. This stock is trading well above its 5-year average yield of 5.7%, near all-time highs for its stock price. My yield on cost is low enough that I'll continue to take the dividends and reinvest it elsewhere for now. Next, we were paid $41.63 in distributions from SmartCentres Real Estate Investment Trust. They provide us with 5.7% of our annual dividend income. This is a staple of our turf portfolio with its monthly distributions. I gladly hold this in our Tfsa since we don't have to worry about the tax headaches of holding REITs. They're trading below their 5-year average yield, meaning it could be a good value right now. It is about on par with my yield on cost. They haven't raised their dividends for a while and I don't expect them to. I'll be using their monthly distributions to reinvest in SmartCentres at this valuation. And here's a baboon for a little break. The next paycheck was from Tfsa Energy Corp, $131.40, enough to drip 2 shares. TRP provides us with 6.5% of our yearly dividend income. They're trading well above their average 5-year yield of 5.4%, which could indicate it is overvalued right now. My yield on book value makes me comfortable even when the energy sector goes into the downward part of the cycle. I hope the stock price drops so I can drip some shares again for organic compounding growth. Our next pay was $95 from the Bank of Nova Scotia. They provide us with 6.8% of our yearly dividend income. We got paid in our Wealthsimple account back in April, and May was for our Scotia iTrade account. BNS is currently trading around its 5-year average yield of 4.7%. Last year, there was a huge 11% dividend raise, which partially explains the elevated share price. I have this one on drip in our iTrade account as I believe it is fairly valued right now. And now for our largest holding, Riocan Real Estate Investment Trust. They paid us a distribution of $64.10 across our 3 accounts. This company provides us with 8.4% of our yearly dividend income, which is a little rich. It has a 5-year average dividend yield of 6.16%, which is drastically higher than the current of 4.6%. This is mainly due to Riocan slashing the dividend by 33% back in 2021. When the dividend is back to 2020 levels, hopefully by 2024, 2025, this will provide a yield of 6.6% at current price, indicating it is undervalued right now. I'll keep dripping this all I can. Lastly, we have our only monthly financial payer in First National Financial. We receive $64.62. They provide us with 8.5% of our annual dividend income. This stock has tanked since mid-2021. They currently provide a 6.4% yield. With a 5-year average yield of 5.6%, this is technically undervalued, though I personally think it is now fairly valued. It has also paid out 5 consecutive special dividends in December. I hope they do so this year so I can pick up some extra shares to increase my yield on cost for this one. My top 3 dividend pairs accounted for $291.02 or 61% of the $473.99 of dividend income for the month of May. As we grow the portfolio, this should moderate somewhat. I never want to be too dependent on one company to help my portfolio grow in the event of a dividend cut. As you can see from the breakdown, no one industry or company dominates our dividend income. Now, a huge part of our dividend income growth are the dividend raises. This month, 4 companies raised their dividends. Algonquin Power and Utilities Corp, 6% dividend increase, a dividend streak of 11 years. TELUS Corporation, a 3.4% dividend increase, a dividend streak of 18 years. Canadian Imperial Bank of Commerce, a 3.1% dividend increase, keeping the dividend streak of 11 years. Bank of Nova Scotia, 3% dividend increase. With these raises, we added $59.84 to our forward annual dividend income. At a 5% yield, that is like deploying another $1,200 into the market. So far this year, we have received $3,500.71 in dividends with a yield on cost of 6.53%. Our forward dividend income is $9,200 and growing. We expect our dividend income to continue to snowball as we drip and stay completely invested, putting those dividends to work for us. I think of my dividends as my little minions that work hard for me when I can't. With our minions working hard for us, we can forecast where we will be in about 10 years. I hope to outpace this forecast as the TFSA contribution room grows in the future. Thank you so much for watching and helping YouTube inflation by smashing that like and subscribe button. Until next time, I'm Mr. Financial.